Good morning, ladies and gentlemen. I'm glad to have you guys here on this 29th of December 2020. Hope you guys are having nice holidays and everything. We're heading toward New Year's. I'm going to tell you guys what. New Year's Eve and New Year's Day, I'm going to be off on the show. But I'm going to keep you guys informed. Now, listen. A lot going on out there. I'm going to turn the charts on right here and let's take a look at this. I was watching the show Johnny Bravo, you know, and I get a kick out of him, but he simplified this and he's got his two fingers up in the air for a reason there. He's saying here that there's only two ways out of the situation that we're in: default or to inflate. To inflate the problem away or to default on it, on this giant, enormous credit debt binge that we've been on for years. We've created this huge bubble in the economy. Our whole economy is a bubble, and there's only two ways out. And, he's right. He's dead on right. There's only two ways out. But, really there's only one way, in truth. Because they can't default. Can you imagine the United States defaulting? It's not going to happen. Don't hold your breath ever waiting for it to happen, because it's not ever going to happen. The United States is not going to default. Default is not an option. That means the treasuries would all become worthless. Everything would just basically collapse. And in fact, if they let us move too far toward deflation, it's going to take that much more money to pull us back. And right now, they're in a big fight. Over this stimulus thing, and the Republicans want us $600. The people can't. $600. How far is that going to go? It's not going to go anywhere. And now it's the Republicans that are the holdup right now on the $2,000 stimulus package. It's got to go through the Senate. It went through the House, went through with flying colors, no problem there. And they sent out this message to the American people on the media. The House passes bill to release $2,000 to every person out there. Well, most people don't know. They think, hey, this thing's passed, when they see that in the news. House passes bill to $2,000 for every, and they're ready. They're ready to get that money. They need it. Oh, they're really, when you raise somebody's expectations for something, and in fact, millions and millions of people's out there expectations, and then if you try to go through the Senate, and then you get it put down today, well, that's just the recipe for making people upset. Because some of them might even have spent some of the money already, for crying out loud, that they haven't even got yet because they really need it. And then all of a sudden they're going to come through today, and maybe a couple in the Senate, maybe a couple Republicans will vote the thing down. They're playing with fire, I'm going to tell you. They're playing with fire now at this point. America needs this money, something desperate. It's their fault. First off, let's understand very clearly it's their fault. They're the ones who have put Americans out of jobs by closing everything. And now, if you had a kid come in the house and he knocked something over and broke it, a vase, he had a vase on the counter and he broke it, you'd expect him to clean up the mess and possibly to pay for it out of his allowance. Well, they broke it. And they're just going to walk away? And ignore us when we don't have any jobs left anymore and stuff? We're all feeling the pinch. I'm feeling the pinch. You guys out there are feeling the pinch, and some of us are feeling the pinch a lot worse than others. It's not fair. It's not fair at all. Anyway, so he's right. Only two ways out, but actually there's only one. They're going to have to inflate. Well, they're going to have to do it anyway, so why wait? Why let a whole bunch of people and be pushed out of their homes and everything else before they start to inflate? Why wait until make us all feel pain? Just do it. It's not like it's the end of the world. Silver price today is down 6 cents, 26.14. Let's take a look at gold today. Gold is going along sideways, 1878. It's up $5.20, but they're right now, gold and silver in a very narrow range, narrow trading range. you know. And on the charts here, you can see these large swoops up and down. That's not really all that big of volatility because it's a very narrow trading range we're looking at right there. Cryptocurrency today, 715 billion. I better refresh the page here for a second. 709, yeah, she's trickling downwards a little bit today, cryptocurrency. But you know, this is how markets always go. If a market takes a huge leap upwards, then what it'll do is you get a whole bunch of people out there who decide, hey, I'm selling. I'm selling. I'm taking profit. Boom, boom, boom. And it comes back down a little bit again. That's flushing out the weak hands. It's getting rid of the people out there who just were in it to make profit and stuff and not in it for the long haul. But what I'm noticing is it's not dropping significantly fast. And this means that more and more people are HODLing. And your army of HODLers, it's not like it was before Bitcoin when it was up at 20,000 before and it dropped like a stone. That ain't the way anymore. People are not so willing anymore to dump their Bitcoin. The willingness there is not there like it was to just dump them. You know, people are more hanging on to them. They're realizing it's almost what it reminds me of is back in 1965. 1966, when people were sorting out the silver from their change and saving it because it was better, and they started to recognize it was better. Bitcoin's the same thing now. It's Gresham's law, and they're not so quick to get rid of it. The thing is they're because they recognize that it's better. It's a better form of money than the U.S. dollar, so they're not so willing to sell it for dollars. And this is going to get more and more this way. It's the same way with gold and silver. Dow Jones Industrial Average is up 6 points, 30,410 today. We're looking at crude oil today at $47.95, and it's up 33 cents on the day. Now let's take a look at the MOVE index. You know why this MOVE index is important? This is your credit markets. So we got to watch it very carefully. If the MOVE index goes over, say, 75, then the credit markets are getting in jeopardy. Okay, so this is why we watch the MOVE index. It's at 45.26 right now, which is pretty good. That means the credit markets are going along pretty good. Let's take a look at bonds and rates. What we're looking at here is the U.S. Long end is moving ever so slightly, but it's really not that big a deal because the yields are staying low, and they're going to stay low. They cannot raise these yields. I had a commenter on my section say, well, what would happen to cryptocurrency if they raised yields? The treasury yields went up. Well, cryptocurrency, gold and silver, would drop like a stone if the yields were to go up. But the economy can't take it. They tried with quantitative tightening. A couple of years ago, they tried to raise interest rates. And it was a massive failure back when the economy was much, much more better than it is now. The economy now is much weaker, and they can't budge off of these rates. I don't think that they could take the U.S. 30-year over 2%, and I don't think they could take the U.S. 10-year more than, say, 1.5% right now without causing a massive crisis. In the short end, they have to keep it down near zero on the short end of the yield curve. They just can't move on this now. They're stuck. And this is their most powerful method for fighting inflation is the yield curve and the bond rates, but they can't move. They're stuck. So that's like a lever that the Fed has, that they're able to move the lever this way if inflation heats up, move the lever that way if inflation cools down. That lever's broken now. So we're on a train, and they got the lever, and that's the brake lever for the economy. And it's busted, and the train's coming down the mountain, and we're going faster and faster and faster, and they got no lever to control this situation. It's broken. That's basically what's going on. This is their lever, and it's broken. U.S. dollar index today. 89.98, so it's dropped down into the 89s again, We could actually see a little bounce in this dollar if the market if everything starts to roll off. We could see a little bounce, but don't hold your breath waiting for the markets to fall 90%. You know, first off, one of the big things that's like you hear these guys out there on the shows, talking about the market's going to fall by 90%. You've heard all these guys. The thing is don't hold your breath waiting for these guys' predictions to come true, because if the market starts to fall like that, it very well could start to fall like that, and if it was left alone, it would fall 90%, probably fall 95%. But that would be taking the Fed out of the equation. That would be just pretending like the Fed's not even there to step in and do anything. Now, back in the roaring 1920s and the 1929, when they had the big stock market crash back then, we were on a gold standard. And that was a limiting factor to how much the central banks could print. There is no limiting factor anymore. So like I showed you in the bond market, they have limiting factors now that they didn't have back in those days. They could move the rates. Now they can't move the rates, but back then they couldn't print endless amounts of money, and now they can. So they will do what they can do. You know what I mean? That's the way things work. Uh, you know, this has been a total disaster to the economy. What's just occurred, with this virus and everything, and the economy has not recovered from it. In fact, it's getting worse. It's still on the slope downwards. Uh, we're in a huge period of danger coming right up. I'm going to tell you guys what it is. It's the last 2 weeks in January. It's a huge period of danger that's coming right up. I consider it to be the most dangerous time since the American Civil War for America. Is the last 2 weeks in January, and if we can make it through that period without things falling apart, then uh, later in the summer, I think we're gonna reach a bottom in the spring sometime, and by later next summer, things are gonna turn around, from that bottom. But that recovery that we're gonna enter into is going to set us up for the hyperinflation, and we're gonna enter into something that's called the acceleration phase. And the acceleration phase can last. It can last anywhere from 6 months to 2 years. The acceleration phase of a hyperinflation, and we always have an acceleration phase in the beginning of a hyperinflation. We haven't had that yet. You guys haven't experienced the acceleration phase yet, but the acceleration phase is not to be taken lightly. You're going to see excessive inflation like you've never seen before. At the same time, people are out of work and everything else. This whole thing is a recipe ultimately for civil unrest, coming up in the future when we go through the acceleration phase. And the hyperinflation, it's only going to get worse. Think Venezuela. Think people in the streets hurling things, This is kind of the way America is going to be in the hyperinflation, and store shelves with nothing on them. Or if they are stocked, you can't afford to buy the stuff because it's so expensive, priced in dollars, And it's just going to be bad, when that hits. And I'm kind of expecting that in 2022. 2021, I'm expecting us to reach bottom on what we're doing right now, with this deflating economy, and then to start to make a turn in the middle of 2021. And by the end of 2021, things to be looking better, but then things to disintegrate again in 2022 because of the accelerating inflation rate, There's no easy solution, no easy way out for this ginormous debt bubble and debt system that they've structured. It's a system based on credit, and it's going to have to roll over. It's going to have to end. And when it ends, we're going to go back to hard money. And very possibly the hard money that we're going to go back to is cryptocurrency is going to take over the world. It wouldn't surprise me a bit, you know, if cryptocurrencies take over the world and then we start to move into more of a computerized type society. Thank you guys for listening. Like and subscribe. Give me a thumbs up. And we'll keep you guys informed on the latest breaking stuff in the financial system and stuff. You know, I'm out here 6 hours a day digging in the trenches, trying to find the stories that are breaking, the newest stuff, you know. And you guys are right here on the cutting edge with me. And we'll catch you guys in the next show. Bye-bye.